Market volatility is on the rise amid uncertainty around trade and the economy. So what are we seeing in terms of fund flows as investors position for this new environment? Joining us now to discuss is Andres Rincon, Managing Director and Head of ETF Sales and Strategy at TD Securities. And Andres, thanks for joining us.
Thank you for having me.
As you know, we are seeing a lot of volatility in the markets. How is that playing out in the ETF fund flows right now?
You know, that's interesting. We've seen so much volatility in the market, and you've been talking about it, I'm sure, not just in today's show, but across the last few weeks and months. And despite all this volatility, we're still seeing a lot of activity in the ETF market. We're seeing a lot of trading in the ETF market, which obviously, if you have a lot of volatility, you're going to get a lot of people, a lot of investors, a lot of institutions going back and forth with the ideas because there's a lot of confusion and uncertainty. So activity-wise, it's been stronger than we've ever seen, to be honest. So we've seen almost record numbers in terms of trading in both actually equities and also ETFs. So this tells you the story of the panic that's really out there in the markets. On the fund flow side, despite the volatility, we've seen actually very good numbers on the fund flow side. So it's been relatively steady as to money still coming into the ETF space. Really, the question is, where is it going? Because it's still coming in, and there's still some uncertainty, and despite that, there's still money coming into the space. Now, what we've seen across the board, not just in North America, but in Europe, is a shift from a very strong passive equity environment, which is basically all we saw last year with Trump coming into power, to now a big shift towards fixed income and cash products and money market products or defensive strategies, so like cover calls and stuff like that. So we've seen a huge movement in those areas. We've seen nearly record numbers this just last month, for example. So it just tells you that the ETF investor is still very much alive in coming to the space, but obviously just shifting their portfolios a little bit.
Yeah, talk about that risk environment right now. Are you seeing similar moves in both Canada and the United States?
Yeah, so 100%. So we're seeing, as I mentioned, a move to more of a conservative portfolio. So I'll just give you a little bit tidbit. So in the month of February, we had more money coming to fixed income than went into equities. We haven't seen that in a couple of months, really. I mean, we saw that a couple of years ago, let's say during COVID, but that's come back now, where fixed income has become really, really strong. We had the second largest month for cash and money market ETFs in the history of ETFs here in Canada. So obviously, you're going to seeing a lot of money pile into these money market ETFs.
Especially as we see the markets are pulling back from some of the record highs.
Exactly. So all that uncertainty, you're seeing that. I wouldn't be surprised if you're seeing a lot of money going to GICs at this point in time. So very strong numbers on broad fixed income, cash, but also we had, I think it was the second largest number from a cover call space here in Canada. So we had a substantial amount of money move potentially out of equities and into a cover call environment, which is more of a yielding, slightly lower volatility environment. One thing that's interesting here in Canada is we're seeing a bit of a move towards patriotism. We're seeing a move out of U.S. equities, which is a lot of what we saw last year, and we're seeing more money going to pure Canadian. There are several lineups here in Canada that target best of Canada. Global X has a relatively new lineup that basically targets the best companies in Canada. But there's many other companies and/or issuers that also target or have ETFs that target Canada in general. So we're seeing a bit of patriotism and move towards those securities. Now in the U.S., it's been a similar story. A lot of money into fixed income. As I mentioned, I think it was the largest monthly inflow into fixed income in the history of fixed income ETFs in the U.S. So it's about $40 billion just in February. So very strong month for fixed income, but also the largest, from a flows perspective, month for cover call ETFs also in the U.S. Now, obviously, we've been talking about cover calls and fixed income, but equity still had decent flows, a little bit lower than, let's say, last year on a monthly basis, but still reasonable numbers. What we are seeing, though, is a move out of the U.S. into international markets in general.
Some interesting trends there, and I want to dig into some of those trends in the ETF space. We have a new market king as SPY has been dethroned. Tell us a little bit about that.
Yeah, no, that's very interesting. For those or you that are the listeners, SPY was the first ETF ever listed in the U.S. The first ETF ever listed was here in Canada. It was the TIPS that eventually became XIU. TIPS and HIPS eventually became XIU. But the first one in the US was SPY. Since then, obviously, it's grown massively over the years, and it's trading well above $600 billion in assets under management. Now, there's they have competition, and SPY is owned by State Street, but there's also competition from Vanguard and iShares with VOO and IVV respectively. What's really interesting that these two products are really used differently to some degree. IVV and VOO are lower cost and are used more for long-term investing. They generally tend to be less liquid on the board, obviously still very liquid compared to many other ETFs, but less liquid on the board compared to SPY. SPY is used by all the institutional shops in the world. It's used by derivatives traders. So it has a much larger ecosystem than IVV and VOO. However, it's a little bit more expensive, and it has a slightly different structure. So long term, as we can see, it's actually appealed more to a subset of clients. Now, the retail investor and the wealth investors has looked more to IVV and VOO over the last few years. And as of recently, VOO dethroned earlier, a couple of weeks ago, SPY is the largest ETF. Now to be honest, they've gone back and forth, and SPY is still the biggest right now. But if you look at the long-term trajectory, we suspect that IVV and VOO, especially VOO, will surpass SPY as the largest ETF in the world.
I'm sure that's a trend we'll be following closely over the next coming months. Another trend that you're seeing is single stock leveraged ETFs. Walk us what's going on there.
Yeah, so that's a fascinating area here in Canada. It's very popular in the US, but it also has become very popular here in Canada. This flavor in Canada is slightly different than the US, but in essence, what these ETFs hold is a stock. That's all they hold, and then they do apply leverage to that stock and or cover call. So instead of the individual going and margining their account and margining that position on that stock, the fund does it for you. So generally here in Canada, it's 25% leverage that they add to a specific US stock. Generally, it's one of the very popular stocks like a Coinbase, MicroStrategy, Google, you name it, they're available there. There's two issuers, One Purpose and Harvest have lineups here in Canada. And then they also often apply cover calls for the extra yield. So basically, you're getting your, let's say, low-yielding Apple with a little bit higher yield and volatility, and that's what they're trying to do.
Okay, now let's talk about private assets, ETFs. You've talked to us about this asset class in the past. Can you give us an update where we stand right now?
Yeah, so this is a very fascinating area, and I would say slightly controversial at this point, in the same way that when the first fixed income ETF ever launched was controversial. These ETFs are now allocating anywhere between 15% of their portfolio to 35% of their portfolio in private assets. In this case, it's private credit. So State Street, same issuer that launched the first ETF in the world, launched PRIV, for private, obviously. So they have a relatively small allocation, as I mentioned, to private credit. So this is a credit fund. The rest is in IG or investment grade. And what's really fascinating, this is the first ETF that does this on this scale, really. And without getting into the weed, really the fascinating part is this ETF launched. It was approved by the SEC. There are some hairs around it and some kinks around it, as you normally have with the evolution of a new product. But most importantly, this fund might be the gateway to private assets for the ETF industry, which is a $30 trillion industry that the ETF industry has never.
A lot of potential growth there.
Huge potential growth. And now we're seeing, believe me, every single issuer in the US is looking at different ways to do this. BlackRock has been working on this for many years, same as Vanguard. So we do suspect that we're going to see other issuers in the market on this. And it is a fascinating space in the US now. So it's PRIV in the US, the first one to do it, and we'll see more in the US, I'm sure.